Hello everybody and welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer and today we're going to be analyzing Nvidia, and I'm also going to be using Nvidia as a case study for helping to avoid FOMO and also avoiding resulting, which is a term we'll cover here. And I think it's pretty important, and hopefully this can help kind of an individual investor frame things in the proper perspective or in the best perspective when they miss out on a stock that has gone kind of parabolic. So this is going to be a combination of a little bit of analysis on my part, I'll more of a commentary on Nvidia's current valuation, and also the main point though is going to be this case study and examination of these kind of traps that we don't want to fall into as investors. So this Nvidia did come in by request down in the comment section of one of my other videos, but I'm going to put this on my kind of case study playlist here on the channel. So hopefully if a person watches one of these case study videos and they find it useful, then they can go to that playlist and then they can watch all of those. As usual, this isn't individual investing advice. This is just how I analyze stocks and how I create strategies a little bit in this video. If you find, I'm going to use fast graphs here a little bit. If you find that useful, I have a 25% off link down in the description, and I get a little commission if people come through that link and decide to get a fast graphs subscription. I've had mine I'm on my 6th year now, I think. And it really speeds up that initial kind of sifting through stocks process. So I find it's pretty useful, and I usually use it in just about every video. I'll probably use it a little bit less in this one because I'm going to talk a little bit more. Okay, so let's get into, I'll start with my just initial take on Nvidia right now. So this fast graph is from yesterday's close. Nvidia just reported earnings that the market really liked. I don't even know if it's showing its current, maybe I need to scroll down a little bit here to get the current price up, but oh, it's over here now. They changed it. So yeah, it's up to, let's see, $772 per share. So it gained $100 per share since the close, at least as of trading as I'm recording this. And basically what has happened is we have a race among the big tech companies, the big media companies, to include AI in what they're doing now, and more like the generative large language models and all that stuff. I think everybody kind of knows that now, but we didn't really know that a couple years ago. And so, all the chip companies and everybody like that, they weren't really prepared for that. But Nvidia had the best product for those applications. And so the companies that are buying those they have a lot of money. I mean, Meta, Google, Microsoft, these guys have plenty of cash to spend, and so Nvidia can charge a lot and has plenty of demand for the products that they have. So that's what has happened. You can see earnings have risen and are expected to keep rising here. That's what we see in the fast graph. So they're up 300%, we'll call it, this year, and then expected to be another 100% next year. Nvidia actually gave a little bit of guidance, it sounded like, in their earnings call, where they had a little bit more visibility. This demand was going to stay pretty strong. So we don't know exactly what these growth rates are going to be, but the idea is, if you look at Nvidia's now $800, price, if earnings grow 100%, whatever the PE is, we'll just look at what it is here. So the PE was 50. We'll just use this price for now and pretend like the jumped in, because you could have done this before they reported earnings if you just thought that future earnings were going to be positive. Say, okay, that's a 50 PE. That's really expensive. But when you double the earnings, right, it's only a 26 PE. That's like almost market average now, right? So the question isn't whether it's overvalued right now. It's not overvalued right now, based on the next year's expected earnings, or maybe even 2 years. So we can, and actually maybe, I think we can even do this in the fast graph. Let's just take a look real quick. So if you go in, and granted, this is using pre this earning. All these will go up tomorrow probably. All these estimates of what the future will go up. But let's say with a growth company like Nvidia, you think that a 30 PE is fair to pay. Well, at the current growth rate, if you go out 2 years, and you're willing to pay a 30 PE, that's an $843 stock price. That's the value that it would be priced at. So that's even higher than it is after this bump. So in that frame of reference, it's not overvalued, okay? But here's how it could become overvalued, or why it could still be overvalued. If you expand that frame of reference, what we don't know is, what are 2026 earnings growth going to be? What are 2027's earnings growth going to be? As more alternatives come into the market, eventually they will, but we don't know when they will. We don't know how much continued demand AI is going to have, what sort of productivity gains AI is going to produce, and how much companies are going to be willing to pay for those productivity gains. Those are all really unknown. And that means that these longer-term earnings forecasts for Nvidia are unknown as well. So it could be a boom and an eventual bust once competition comes on. But we don't know how long that will take. And we don't know what level Nvidia's earnings will reach before that competition eventually catches up, or spending for the product that they have goes down. I don't think anybody really knows. So that's the risk. And that's really just how you kind of have to frame it. Now, I'm the type of person who I think about risk first generally. And if I can control for that and I think I can have a good deal, then I will buy the stock. And I know I'm going to miss out on some stocks like Nvidia sometimes, especially when something really unpredictable. I think even people working in AI didn't realize how big it was going to be at the time that it was going to. So to me, like, nobody really, or very few people, would have been able to anticipate what happened, which brings me into my next topic. Annie Duke, who was a professional poker player, she has another book called Thinking in Bets, and I never read it because I already think that way. I used to play poker, so that's just how I naturally think. And really, the book that I'm about to show you, which is How to Decide, okay, Annie Duke, it was kind of the same way when I read it. I was like, well, I already do like 90% of everything in the book, but it's well organized. It's a really well organized book, and I do recommend it. Her opening chapter is about a term she calls resulting. And resulting is when you look, well, let me read it here. A mental shortcut in which we use the quality of an outcome to figure out the quality of a decision. So this brings me back to Nvidia, because I wrote an article on Nvidia, my only article I've ever written on Nvidia, in September, right around here, September of 2022. And I'll pull that headline of it up, okay? So this is over on Seeking Alpha. I had a neutral rating, and I said, here's the price I'll start buying Nvidia. So I write these type of articles when quality businesses are getting kind of close to a price where I would consider buying it, where I think it's at a discount, and I have a low probability of losing money and a high probability of making a lot of money. And one of the ways I set myself apart from a lot of other writers is I will literally come out and tell people, this is where I'll start buying it, usually, roughly, if it hits that price ahead of time. And then I'll explain my reasoning why. And that's what I did in this article. I did one for Microsoft almost the exact same time. It might have even come out on the bottom of Microsoft. I also had one on AMD, which actually hit my buy price. I did one on Micron around this time that hit my buy price, okay? Those are actually kind of important things to consider as well. So I write this article. I'm like, here's where I'll buy it. Now, the price that I said in the article was $103.94. Okay, so Nvidia got down during that downturn and during the next month to 108.13. Okay, so we were within $5 of my buy price at the bottom, and AMD did hit it, my buy price, and I basically was able to bottom pick that one. So of the 3 chip stocks I wrote about, also Google got within like $5 or something of my buy price. It was Alphabet was very, very close. So I was able to pick up a couple of them, and then a couple of them got close. Nvidia got extremely close, but I didn't buy it because it didn't hit the price, that I was looking for. And now it's up. Okay, this says 450%. It's probably closer to, well, from the time the article was written, it's probably like 500%. And from the bottom of the stock, where it bottomed, it's going to be up like 600% or something like that. So I missed it, right? And so what Andy Duke is trying to explain, and the way I would explain it too, and once you train your mind this way, it definitely helps, is you could say, well, that was a mistake. Like, I made a mistake on Nvidia. I should have just bought it whenever I wrote my article, But that's looking at what happened afterwards and then going back in time and judging that decision at the time based on the resulting that happened afterwards, rather than the quality of the decision and the process that you're using to make that decision at the time. So I know my process was pretty good. One, because I didn't buy Nvidia when it was up here for the 2 years before. I didn't even write about it. So I was able to identify a quality business, right? There are plenty of chip companies that are still down because they didn't hit the AI kind of jackpot. So I was able to do that. I was able to almost get the bottom. Now, I don't try to predict the bottom. I try to put out a price that I think I can make a lot of money on that has a reasonable chance to actually hit. So the question is, well, how can you determine like whether it had a reasonable chance to hit? Well, one, it got close. 2, AMD, which I wrote about at the same time, did hit, and I did buy it. And so it hasn't done as well as Nvidia, but it's at least captured some of this. And I was able to get that almost right at the bottom. And then when it got up to here, to this peak, I sold half, and I decided just to hold the rest for the long term because there's some secular growth underneath what was going on here. And then it ended up, and then this is also up more than this, so that second half of my position's up a lot, right? So I don't think it's up as much as that fast graph showed. I'd have to go double check. Well, maybe it is, yeah, because I reset that. So yeah, it probably is up like a couple 100%. That actually sounds about right. So, so I know that the process is probably pretty good. Just with chips, I got 2 out of the 3 bought because I got Micron as well. And then Microsoft was very close. Amazon was not Amazon, but Alphabet was very close. And Nvidia was extremely close. And I didn't really write about a bunch of other stocks and businesses that were bad. I picked out really all the ones that I identified as high quality turned out to be high quality. And it was all about what type of opportunity that the market was going to give me to invest. So the overall decision-making process was very good. And so over time, if your decision process is good and you're not like super overweighting things, this is one of the reasons why I'm mostly equal weight, 1 or 2% of a position of a portfolio, because I know my process is good. So I don't need to rely on getting lucky, really. I just need to have the process work well over and over again over the long term. And then I know I can consistently get these winners, right? And make small adjustments along the way. So I think that's one of the big lessons of NVIDIA is that you don't approach stock investing like a lottery ticket, okay? Because nobody really, even Microsoft didn't know. OpenAI didn't know. the actual people that were making the because if they did, they would have already gone in and gobbled up all these chips, right? So that means there's no way anybody could have known. I think, what's the other one that's up a lot, like super microcomputer? There's no way anybody could have known ahead of time, because the people that were actually doing it that were making the products and running the companies that were using them didn't know what was going to happen. And then the question of whether a person should buy now, which I tried to kind of talk at the beginning, well, it just depends on how long you think this can go. It's about the length. It's not overvalued based on the next 2 years' earnings. The question is, will it be overvalued or undervalued based on the 5 or 6 years that come after that? And a person is going to have to try to make that judgment. I mean, I don't know, because I like to have really high because the thing is, really high probabilities that my buys will work out. Because the thing is, if I would have gotten this one along with AMD, if it fell another $5 and I was able to buy it, that's a 600% return, okay? And a market that's returned 25%. So one of these positions is worth what, like 20, we'll call it, S&P 500 index positions in terms of return. I can have one of these positions get hit, and I could get the return. Now, I don't expect that, but it does happen. I mean, you can do it. And if I would have gotten it, I probably would have sold half of it. So instead of a 600% return, I probably only would have had like a 3% in reality, right? So hopefully you can take a few things away from this. Think about your process, and go on, from there. If you found this useful, hit the subscribe button, and like the video, and I'll see everybody later. Bye.